Welcome to Illuminati Silver. We tell you the truth about silver. Today is Wednesday the 4th of December 2019. And yesterday we produced two videos. One, stock markets fall, gold and silver rise after poor ISM data and tariff threat. And the second, US versus France at NATO summit, market implications. And that was a late video with a discussion with controversially Greg. Now in these we discuss the poor US economic data coupled with the trade deal in China looking as if it's going to be delayed, and also President Trump threatening additional tariffs to other countries such as France and the EU as a whole if necessary, and admitting that he will use tariffs as a means of balancing the score with those countries not paying their fair share of 2% of GDP to finance NATO and the defense industry, has caused the dollar to fall, equity markets to decline, and gold and silver prices to rise. For months, we've stated that the US-China trade war is, short-term, we emphasize that, one of the most important influences on gold and silver prices. Not because of a causal link between supply and demand of the precious metals, although it has an effect, but because any slowdown in economic growth affects company profits, thereby affecting their share prices, thereby affecting fund valuations and returns, thereby causing monies to flow out of equities and into other investment classes. With bonds offering around the world either very low or negative interest rates, and other markets appearing high or in bubble territory, the natural place to then assign monies to is gold, followed by silver, although this doesn't always happen. But it will increase. So, if in the past few days in particular has shown us something, and that is how baked in a China-US trade deal has been for equity markets and traders, and how they are now beginning to suffer as that deal looks as if it's either not going to happen or is being kicked into the long grass. Now, it's our contention, and we've said this before, that there will eventually be a trade deal between the US and China. And whilst even we hoped that at least a phase one of a possible three-phase deal could be signed this year, it now looks as if this is impossible. Not only that, it is becoming increasingly clear that it's not in President Trump's best interest to have a deal this year, as its importance will be forgotten about come the general election in November 2020. It would be more impactful having a deal later next year, with the promise of goodies to come, as opposed to perhaps a deal being struck and those goodies still disappointing. That said, it's all a high-risk strategy, as if equity markets tank in the short term, President Trump will not only be facing political turmoil at home and abroad, but also will not be able to prove to voters that his grasp on economic success is valid. And this is the linchpin for his electoral victory, in our view. So, why do we believe that a China trade deal is unlikely? Well, let's just take a look at some of the headlines just this morning. So, taking a look at the headlines. Bloomberg, this morning. Headline: Trump downplays China deal urgency as trade risks roar back. US House passes Xinjiang bill prompting threat from China. Let's look at the BBC. US House votes for China's sanctions over Uyghurs. US House backs sanctions on Chinese officials over treatment of Uyghurs. Trump: I don't know if I want to make a deal with China. How China-US rivalry is dividing the internet. Let's look at Reuters. Trump comments, Uyghur bill hurts prospects of US-China deal. China says US bill on Xinjiang will affect bilateral cooperation. Trump says China trade deal may have to wait amid sticking points in talks. Proper US-China trade deal more important than timing, US Commerce Chief. US Commerce Secretary Wilbur Ross on Tuesday rejected any deadlines on a trade deal with China and launched a fresh attack on telecoms giant Huawei, further dimming hopes for an end to a 17-month trade war that has slowed global growth. US says won't speculate on possible China retaliation to Xinjiang bill. China says opposes US House bill on Uyghurs. China's top diplomat says China, US must boost strategic communication. We already reported yesterday that the ISM Manufacturing Index for November declined from 48.3% in October to 48.1%, against expectations of a rise actually to 49.2%. The Dow Jones closed on Monday down by 269 points, and on Tuesday by another 280 points down, with the S&P closing down 27 points and another 20 points yesterday. Gold this morning, and it's currently 900 hours GMT, stands at $14.82, some $19 up since Monday's opening, and silver stands at $17.27, up 25 cents since Monday's opening. This represents a rise of around 1.5%. Not huge or dramatic, but quite telling when one considers that both prices actually were falling once Mondays had opened originally. So there's been a reversal. The dollar index has weakened and is currently 97.6, down 0.6 since Friday's close. European markets have managed, however, to recover a little this morning, but all Asian Pacific markets are down. Now, a great article published by Bloomberg today is worth noting. We shall read it to you. Here's what happens to markets if US tariffs on China kick in December 15 by Eric Lam and Gregor Stewart Hunter. December 3rd, 2019. Bloomberg. President Donald Trump's latest missives on trade are a wake-up call to markets close to record highs that a major deadline is looming with China. The December 15 flashpoint on tariffs was thrown into sharp relief Tuesday when Trump said he sees no urgency to complete a deal, right after he threatened an assortment of trading partners with levies. Quote, if tariffs scheduled for December 15 are implemented, it would be a huge shock to the market consensus, unquote, said Sue Treen, Managing Director for Global Macro Strategy at Manulife Investment Management in Hong Kong. Trump would be the Grinch that stole Christmas, she said. Global equities came within a whisker of their all-time high last month, propelled in part by swelling optimism that at least an interim US-China trade deal was in the offing. Meantime, the clock kept ticking towards December 15, when Trump has threatened to impose 15% levies on $160 billion worth of Chinese imports. With about 2 weeks to go on the China front, the Trump administration Monday hit Brazil and Argentina with steel tariffs and proposed levies on France as punishment over a tax that's hit large American tech companies. Moves by self-styled tariff man Monday were enough to trigger the biggest Wall Street sell-off in 8 weeks, with a little help from a weak US manufacturing report. I have no deadline, Trump told reporters Tuesday in London when asked if he wanted an agreement by the year end. Stocks fell. The US president suggested that in some ways it might be better to wait until after the November election. The following are the views of a number of market participants on what happens if the tariffs on China kick in December 15. Gloomy future. It will be definitely risk-off across the screen, Tong Li Han, Chief Investment Officer at Deep Blue Global Investment, said in an interview with Bloomberg TV. What happened recently makes this trade deal more costly for Chinese leaders, so I'm seeing a gloomy picture for the short term, 1 to 2 months. Better luck next year. With the clock running down on 2019 and prospects of a trade deal looking more remote, it's time for investors to take a little bit of risk off the table, said Steve Bryce, Chief Investment Strategist at Standard Chartered Private Bank on Bloomberg TV. It looks like it's going to be pushed to the beginning of next year at the best case, Bryce said. The message to investors is maybe trim a little bit of equity exposure or certainly not chase the market at this stage. But look to do so in the next few weeks if we see a 5 to 7% pullback. Longer term, Bryce remains optimistic. The US and China will still strike a deal of some sort. That will reduce uncertainty and help the global economy do well. Optimism dashed. For Kerry Craig, global market strategist at JP Morgan Asset Management, a key concern is markets have already priced in the prospect of a trade deal that has yet to be signed. There had been a lot of optimism built in around a trade deal, and it's still the thing that will weigh on markets over the coming months, Craig said on Bloomberg TV. In the meantime, we need to see more of a pickup in the global economy to really offset some of those uncertainties. Buy the dip. For some, the retreat in equities at the start of the week already presents a buying opportunity. I'd fade the correction today, Eli Lee, head of investment strategy at Bank of Singapore, told Bloomberg TV. The renewed tariff pressures on South America and Europe are likely an effort to bolster Trump's tariff man image ahead of a trade deal with China, he said. With the economy in a very delicate situation, if this came on, it would seriously ratchet up the risk of recession, and the White House wouldn't want this situation going into the 2020 presidential election next year, Lee said. Wild day. There may be some massive initial market swings in store, said Chris Weston, head of research at Pepperstone Group Limited, in a note to clients. We could face a wild day, he said. The S&P 500 is likely to fall about 2%, with currencies, including the yuan, Australian dollar and Korean, one also likely to move, he said. A relief rally may be in the offing afterwards, particularly if there's agreement to revisit talks in 2020. Even worse, even if there is a trade deal, it doesn't solve most of the issues that we still have with China, which is something that markets are going to have to reflect in time, said Christopher Smart, Chief Global Strategist at Barings Investment Institute on Bloomberg TV. In fact, it probably makes the relationship more difficult to manage because we've taken tariffs off the table. Smart said time is running out to get a deal done this year, given the logistics involved in setting up a presidential meeting. What does offer solace is that global central banks have eased policy and injected liquidity, postponing the recession that investors had been worrying about, he said. We would hope that a bout of common sense breaks out, Philip Shaw, chief economist at Investec, told Bloomberg TV. Don't forget that this situation is very volatile. It swings to and fro. We wouldn't interpret too strongly events of one day. So there we have it. A cacophony of views, differing but all expressing a degree of concern. It does appear from the article that most analysts' views are broadly in line with others, but noteworthy is the fact that none of them are suggesting gold and silver investments. Now this to a degree is because they are of the view that there is so much liquidity being pumped into markets by central banks and credit policy easing, equities still have further to go, and any recession will at worst be delayed and at best completely mitigated. Now long term, we believe that the US-China trade war has only a limited effect on precious metal prices. There are more systemic issues that will affect them. However, as many people's horizons tend to be 4 weeks, 6 months and up to 2 years ahead, they are important. These issues are important and do have an effect, if only for that time frame. Now, there is additional economic data out today, Thursday and Friday, all of which will affect markets. But it'll be interesting to see what you think is likely to happen to gold and silver prices. Our view going forward? It's that precious metals will have found their base this month, unless a deal with China is pulled out of the bag last minute. And that is about the only thing in our view that can prevent gold and silver prices from rising during the remainder of December. Now, we're not suggesting rockets to the moon, but a stable, firm base, unless there is very good news announced on the China-US trade talks. Finally, just a reminder that we have produced 3 important videos in the past couple of days. $100 silver and silver supply squeeze coming soon. $100 silver plus, really? And is there really a silver supply squeeze developing? We've placed links to these videos in the description box below. Meanwhile, please do comment, share your views with us, and if you haven't already done so, kindly press the subscription button or subscribe button and the bell sign so that you're notified of future videos as and when they are published. Thank you for listening. We hope you have found this video interesting and informative, and if so, please give it a thumbs up and share it on social media. Please ensure that you have subscribed to our channel and press the bell sign so that you are notified of any future videos. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe either as a free or paying member for regular email updates and offers. Disclaimer: Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.